Welcome back to another exciting episode of Charts from the Kitchen, including your favourite Gamestop. This is that chart. A number of different ways of looking at this. You'll have heard all of them by now, I'm sure. But let's focus on 4-hour time frame and what could be described as a tightening wedge. So you've got this downward sloping resistance across the top of price action. You've got this downward sloping support line underneath price action, and they converge to a point. The apex of that formation is where we've seen this break. That break is to the top side, and the measured move from the widest part of the wedge from this point is in and around that target 3 we've got at $45, where we think GameStop will get to eventually. Do we see it getting there now? Well, there's a number of reasons why that entirety of that measure rule might not work. One of which, not least of which, is the fact that there's previous price action highs here, right where we're leaving. You see this area? This is the first area where you'd find a fake out. So if it goes no further than that, there would be a reason for it. What a lot of people don't know about these formations, and what's very common, is when you find this resistance line in line with a fake out zone like this, and one other issue is true of the formation, then it's a little bit dubious as to whether it's going to work out, especially whether you're going to get the full measured move. And that other factor to pay attention to is these levels of support, those that were first relevant to that downward sloping support line. They are still resistance, so price action, despite having broken out of the wedge, is lower than that fish touch of support within it. So it would be possible to describe this sort of, the angle on this wedge, as being not particularly conducive to the most bullish scenario based on the probabilities, nothing else. Though we do have these targets to the top side, one coming in at around those levels, that $21, $22. It's definitely a strong target up there, definitely a strong target. That early time frame, zoom in here, make couple of points to you. You poor folks, yes, poor folks, yes. I've got the dentist, you see, got the dentist. So I'm hoping Roaring Kitty will come back and step in for just a short period of time, so I can get a little bit of work done, and then I'll come back, obviously, I'll come back obviously regularly. So here we have this breakout, inverted head and shoulders, price action moving to the top side. We drew a diamond pattern on price action here, part of the previous broadening formation, the break to the bottom, the return to that formation, how that often ends up being a diamond. You could look at it as such, or you could obviously draw it like this. Part of it being drawn like this takes on added credibility if you were to, for example, go up to the daily time frame and talk about not just the wedge, but the fact that it's within this grander pattern of a downward sloping channel. Now that hasn't broken yet. That has not broken to the top side yet. To be very, very clear on that there is touches in it here, 1, another here, 2, and this is the third touch, which gives validity to that trend line. Not only has it not been broken, it's only just been confirmed, and in that confirmation we know it to be real. So price action hasn't broken that yet. It's also true to say that if it persists here and doesn't break it, then you would anticipate coming in and testing the support line within that channel, of which there's been 2, 3, 4 touches before. Okay, now we did enter that tightening wedge as described at the top of the show, but it's still true to say that this is real down here. 1618, $6.76. That's very real. And ahead of that, you've got the midpoint of this channel in at around 1039. And if it is that price action doesn't manage to break back above target 1 here on a successful breakout, it's not even broken out of the channel yet, and comes back down and breaks below the 236 at 1594, doesn't hold the 50% retracement at 1356, then it'll test the bottom side of that diamond formation. If that breaks, and it may well persist in support at those levels for a while because there's important areas there. If that breaks, then price action will come down, test 1039, and it might even not hold there, go all the way down and test this area in around 9.69 to 9.77, and that would be ahead of another breakdown to test the ultimate support in around 6.76. So these are realistic truths. There's a high probability of that happening if price action doesn't manage to do better than it has done. And what it has done is already quite a lot. So asking more from it from here would perhaps be asking for too much. You know, that move up, that's quite strong already to be asking for more. There's areas and things about this formation that some people will suggest as being true. For example, on this move, if you take it as a bull flag and you would measure from the low, that's the bottom of the pole, up to the high here, you can see there's a 236. This 236 defines the support area on that flag and suggests it's a high and tight bull flag, which would be the best kind. Downward sloping resistance, which forms the pennant at the top side, and then you've got measured moves from within that pennant that would define the break at the first break, which you've got so far, all good. And secondly, you'd look at the full measured move from the flag itself, which would take from the bottom of the pole, drop that on the top side. Oh, that's the Fibonacci. Get back in your box, buddy. Okay, don't need you anymore anyway. So then we would drop that on the top side where the breakout comes from, and look at that, it takes you up around 26 bucks. So we got up at around 26 bucks. Go back up to the 4-hour time frame. Got this target. You see these numbers move around every time I go to different time frames. Anyway, here it is. This is target 2, right? And you can look left, you can see why that is. It's because if you break the first horizontal level of support outside the channel, you come in and test the next one, right? So that all makes sense. It does add up, and if price action breaks to the top side, that would be the narrative people later look back on and said, bro, it was so obvious, bro, etc. You know those people. So that makes sense, right? It's not the full measured move from the wedge, but like it has to start somewhere, doesn't it, right? So you're anticipating there, and $45 in GameStop, that'd be the next target. You see, it makes sense because if you break this horizontal, this is the first one, this is the one we just confirmed it would be reason for, and then you look left from this guy, you've got another one, okay? So there's another reason why GameStop might go to those levels, confluence, add it all up, and I'm sure I could wrap this in a little present, put a bow around it, and deliver it to you. And I don't think anyone could be as convincing at delivering that argument as me. Anyone, including anyone I've, our friend, your friend and mine, Roaring Kitty, I don't think even he would deliver that message with such a lovely illustrative selection of confluent factors across the chart. Not all criticism of him, but a nod to the responsibility I have here to control that superpower of mine, and that is, I don't want to unduly influence your opinion just because I can draw out fantastic technicals and paint a picture on the chart. The truth is, there's a lot more to consider, not least of which is this downward sloping channel, which price action has not yet broken out of. It's not yet broken out of, and there are these lower targets should GameStop come back down again, and you have to be cognizant of those. Tradespotting. What are the chances that that's going to happen? Well, if you're down here on the 4-hour time frame and you're looking at momentum, you can see you've already come up, test the top side of that resistance, and pulled a little bit back. At this point, the RSI and momentum are at the top of where you would likely find them on a 4-hour oscillation, and we haven't yet broken out of that channel, so no definitive change in price, and the momentum has taken it to the area it would typically turn around at. Down to the 1-hour time frame, and you can see that on this move to the top side, price action, having put in a higher high and followed the initial measure rule from the pennant, the RSI is failing to break above previous highs, so less people perhaps taking it to this zone. and that paints a picture of divergence. So come on over, Valerie. This divergent, if that's divergent on the 1 hour, on a 4 hour time frame, if it fails here, what does that equal? Not simply divergent, it'll be a failure swing. That would mean price would be at the top of the range and will be coming down to express the full level of it in the next oscillation, which you know from the drawings and the top of the TA what that means. So I'm not going to do those drawings for you now. I've got a better idea. My proposition to you is that rather than get excited about stupid ass shit about someone liking a tweet, why don't you do the work, put in the effort, and join other people who do the same thing on my Discord, www.discord.gg/rockyoutcrop. I say mine, but I share it with thousands of other traders who I've put thousands of hours into making as good as I possibly can. And on that note, have you seen this video about 2 traders and 1 cup? It's highly recommended. I'm going to link to it here, and I suggest you watch it immediately. Hit the like button and then watch that video.